you're someone who got interested with this entire topic and started when you were super young, right?
Yeah.
So even as someone who was doing engineering, doing a course which has nothing to do with it, you joined a club to gain your interest in knowledge. So you were driven about this, right?
Yeah.
But a lot of us aren't. Like for example, for me in college, I wasn't learning about money in college. I started much later when I realized that, oh, what am I missing out on?
Yeah.
So what would you say for those people who just want to get started but don't have the amount of time to put in the kind of commitment that you did when you got
Right.
started?
So I think initially, before you even start putting your first rupee or dollar in, just understanding the fundamentals of why the stock market even exists, why do companies list on the stock market, what does it mean to own a stock. There's these basics, if you can learn properly, I think that'll give you a good foundation to work towards after that. And post that, what I believe is the best way to learn is by putting capital in. So how I would go about it is, if you have, let's say, 100% of cash with you, put 90% into things that are safe. For example, a mutual fund or an
Right.
index fund. Just put it there, because the chances of that going wrong is very low.
True
Like
that.
you are trusting your money with someone else. But the remaining 10%, keep it as like a learning capital for you to play around with. Like invest in different sectors, different stocks, leave it for 2-3 months, see what happens.
Right.
And through that, I think you build a lot more confidence in investing, and also you learn how things move or what you need to look at, what things
Right.
do well. And once you start getting more confident about the decisions you're taking, gradually move the 90% more into the direct stock portfolio that you have.
Correct. No, that makes complete sense, Rohan. And in fact, one very, very important point that you mentioned here is that you need to have skin in the game, right?
Yeah.
To learn anything. So unless you like invest even like 100 rupees, right, you won't start following the stock market. You won't start seeing these economic
Yeah.
trends manifest.
Yeah.
And the most interesting thing to me was that right now there are mutual funds and ETFs in the country. You can start investing with 10 rupees. Right.
Yeah,
So
and
imagine a college student
Yeah.
that's getting a small pocket money could also try that out to start learning.
Yeah.
Right. And I think that's the most important thing. In fact, I would say that for a lot of these retail investors or people who would not want to do this full time, like even just an index investing approach or a mutual fund investing approach might serve most of their purposes.
Yeah.
Right? Because they'll be able to beat inflation comfortably. They'll be able to make money over time and make compounding their friend. But of course, if you're interested, you could always get into direct stocks, as you mentioned, trying out a small pool of money and getting into this. And this approach makes complete sense. But on top of this, do you also recommend certain resources or courses that people could take? Like, do you think YouTube is something that people could just use to get started with these things? Do you think they should work with an expert? How do you think people could get started?
So I think right now there's enough on the internet for you to learn by yourself. Like you don't necessarily need an expert at a very early stage.
Right.
In terms of resources, couple of resources I used when starting off was the Zerodha Varsity modules. Those were insanely detailed, and a lot of the fundamental and technical aspects, the basics get cleared out through those.
Right.
Apart from that, I'd say to understand the business side of things, a couple of things that I've started off late, I think Nikhil Kamat's podcast, even Shark Tank, for that matter, gives you a lot of context into how businesses and specific industries even function.
Right.
Like what happens in the back end, apart from, just the numbers you see on the internet.
Right.
So understanding that also gives you a lot more context. And once you have that sorted, for the number part of it, couple of websites I use extensively are Screener and Tickertape.
Right.
So that lets you compare companies within industries, see how they're performing related to their peers, the financials, all of that.
Right.
And apart from this, I think at an early stage, what I did was just downloading the annual reports of companies and just reading through them. It's a massive document, but if you could read through at least the first few parts where the management speaks and then move to the financial statements, just going through how they progressed over the years, reading the footnotes, all of that also gives you a lot more context.
Right.
And once you build that, then I think you will find 2-3 resources that you're most comfortable with. Like for me right now, it's Screener and Tickertape.
Right.
Like there are a lot of them apart from these as well.
These are some great resources that you've sort of referred to. And in fact, you talked about that sort of Shark Tank example.
Yeah.
That's a very good one, because interestingly, like we do a lot of these personal finance sessions to just teach people the basics of money. So how I actually explain to the audience what a stock is I tell them, imagine yourself as a shark that's now choosing where they want to invest in.
Yeah.
So the way a shark analyzes a company is the valuation fine right now, right?
Right.
How are the business prospects? What are the modes of the company? So you, as an individual investor, need to look at a stock just like a shark looks at a startup.
Yeah,
Right? So this perspective or way of thinking is something that becomes very relatable for people once they watch Shark Tank. So that's a very good point that you highlighted. I want to get to a problem point from whatever we've been talking about here. So there's a lot of resources online, right? There's courses, there are influencers who keep talking about money. But there can be one sort of a trap there, which is how do you differentiate between what's good information and what's bad information? Because there's definitely a lot of misinformation out there as well.
For sure.
Right? So someone getting started, what are the sort of credibility nudges that you think they should be looking out for in order to validate that information?
Got it. So before I answer this, just want to mention one more resource, and you brought it up as well, which is just following the markets on a daily basis.
Right.
So be it watching news or once the market closes, you just read through the report of what's happened during the day.
Right.
That gives you again a lot of idea as to what is happening in the markets in general, like which industries are doing well, which stock specifically is doing well. So just being aware makes a big difference, I feel.
Absolutely.
And again, having skin in the game kind of motivates you to follow markets on a daily basis.
Let's talk a bit more about this. Like in terms of these resources, right? Is there something that you keep a lookout for to determine whether this is credible information?
Yeah. So for credibility, mostly if it's being reported by a lot of people, then that's one sense that okay, it could be something that is worth even looking into.
Right.
Apart from that, it's again super hard, I'd say, especially as retail investors, when there's so much opacity in terms of what's happening inside the company. Not much gets put out, especially in crisis situations, like we saw with the whole Adani fiasco that happened.
Yeah.
Like nothing much apart from just the report, Hindenburg report came out.
Yeah.
So from a retail POV, it's very hard, I'd say, to know what's right, what's wrong.
Right.
It's just being aware that what could go wrong and being prepared for it is the best we can do.
Right. So are you recently familiar with the whole thing that's been happening with the finfluencers and a SEBI regulation coming out about finfluencers? So what's recently happened is that SEBI came out there and they basically talked about if anyone is providing any sort of financial advice online, then they can't do that unless they're licensed with SEBI. Right. So this was something very interesting for us because we are a SEBI registered investment advisor as a company. So one simple way that people could use is look for entities that are licensed by SEBI.
Right.
Because that means SEBI has oversight into those business models, as well as SEBI is trying to ensure that they're working towards the best interest of the consumer. Right? So this could be one that you could take note of. Maybe there's a lot of influencers that you already follow and they have a SEBI certification but you haven't noticed it.
Yeah.
So this could be one interesting one that you could explore.
Interesting. Coming back to your question about separating the good from the bad information, like how do you know about it? I'd say if the information you're looking for is specific, stock-specific tips, then definitely don't trust anyone online.
Right.
But if the information you're looking for is more sectorial or just understanding concepts, things like that, then I think there's no harm in trusting someone because it's just the knowledge you're gaining. But if it comes to specific stock related information, I'd say like do thorough research by your own.
That's a very good point that you make. And I just want to add a small part to that. So stock tips are all over the internet. But let's say, forget about stock tips, right? Let's say you're working with an advisor and that advisor tells you certain stocks to analyze. Now, not every retail investor might have enough time to go into the depths of analyzing the company. But we call it something called quick research, where you could just do a high level checkpoint research into, okay, what are the valuations? Is there any red flag in the financials? What is the company's PR looking like from a business standpoint? Which you could do quickly to just get a intuition into whether this is sound advice or not. So I would say most people don't need to delve into the kind of depths that maybe you're delving into or maybe I'm delving into as an advisor. But they could just start forming an intuition to be able to validate good information from bad information. Right? That could be some sort of a midway path between going it themselves as well as completely relying on someone else. Okay, so let's we've spoken a lot about equity investing, stocks, mutual funds, even bonds for that matter.
Yeah.
But when it comes to young folk, like folks right out of college, just like yourself, right? There have been all sorts of investment instruments that have been gaining popularity recently, right?
Yeah.
For example, crypto, etc. For example. So, what are your thoughts on those, and where do you think the general sort of trend is heading, and how do young people look at investing now?
Got it. Specific to crypto, like honestly, I don't have a lot of context. Like I've consciously stayed away from it.
Right.
Just because of, again, the opacity of information. Like you don't know what the use cases of crypto could be.
Right.
It's very speculative in terms of the time horizon that people are investing for. So, and of course the volatility added to it, like I just stayed away from it, so don't have much context there.
Right.
But in terms of how the younger generation is investing, I think one thing that I've seen even in the last 4 years is awareness about investing has improved drastically.
Right.
Like right now I have 2 colleagues who are below the age of 20 and I've already started investing.
Oh wow, that's great.
Which I don't think was a big chunk few years back. So awareness has improved drastically. And one more thing, building on what you were talking about, like investing in products that you use or you know, I think that's a trend that is again coming in, because a lot of the younger folks I see who are investing invest in companies that they are aware of or they've used at least once at some point of their lives.
Right.
So that is one. But yeah, I think just the fact that people are getting to know about investing at a much earlier stage of their lives is the biggest difference I see.
Right. And that's a very good point. And I think you also talked about the concept of being familiar with what you're investing in.
Yeah.
So we do agree with that approach completely, that you're better off with things that you know and you're not. You're more likely to make sort of more sensible calls there. So I think that can be a good way that anyone starting off could sort of use that as a good measure for moving forward. But I want to sort of delve deeper into the crypto topic as well, right? Because you mentioned that you're not completely comfortable with it. So from my perspective personally, my biggest lack of comfort there is that there's no way to determine a fair value.
Right.
Like with every stock, with every other investment like a property or even gold, you can sort of determine the fair value of that particular asset. With crypto, there's no way of doing that, and it ends up being completely speculative. Right? So that's why it's completely an experiment, and if you're doing it, be prepared to potentially lose all your money, because we don't know how things are going to pan out.
For sure, yeah.
So totally agree with that.
Yeah. And building on that, I think one more difference with the younger investors is the risk appetite.
Right.
Like their risk appetites are way larger than even mine, where I'm still young. I consider myself to be young.
Right.
So that has also been a change. I think that's why even crypto has done so well, because a lot of the younger crowd with their higher risk appetite are gravitating towards such investment opportunities. So higher risk appetite is also one.
No, that makes complete sense as well. And like I think one thing that does happen is, once you understand how the markets work better, your risk profile tends to become more and more adventurous. Right? Because let's say a person who doesn't have any idea about the markets, the moment there's a 10% dip, they start panicking. Whereas if you know that it's going to recover eventually, as long as it's a diversified portfolio.
For sure.
Right? So I think that has a huge role to play, and I'm glad that there's so much happening on the investor awareness and knowledge front. We are also trying to play a small role there, and hopefully conversations like these will just help take things in the right direction on that front as well.
100%.